So the markets are dropping, recession warnings are everywhere. The US president is making headlines that are shaking global markets and relationships. And if you're feeling anxious, you are not alone. But today I want to share with you the things that people with financial resilience do in moments like this, because it isn't just about pretending that everything's fine. It's about knowing how to respond. So the wealthy, they're not immune to this, but smart investors are not panicking. So Vanguard analysed the behaviour of about 5 million investors during the COVID crash. And what they found was that the wealthiest investors were least likely to panic sell. Lower balance investors were more likely to pull out of the market or stop contributing altogether. But the ones who stayed the course, they came out significantly ahead. So I've lived through 9 market cycles and crashes, which probably gives you a sense of how old I am. But more importantly, it's given me a front row seat to how ultra wealthy investors behave during times like this. And here's what I've noticed. Their reaction is really different from what you see in the media. And is it because they're so rich that they don't care? No, many of them care deeply. The difference is that they understand how money works. They know losses are normal. They know market crashes are normal. And they've learned how to tune out the noise and focus on what really matters. Because the truth is that nobody knows how bad this gets. Trying to time the bottom is a bit like trying to catch a falling knife. And economic predictions. Some analysts estimate there are over 3,500 indicators that tell us whether we're in trouble or that things are fine. You can find a forecast to support just about any view you want. There's so much information, there's so much opinion that the news starts to feel like gossip, and it's incredibly easy to get lost in all of it. That's why I want to talk about a simple but powerful idea, signal versus noise. It's a concept used by investors, academics, and analysts across many industries, but it's especially important right now because your ability to make good decisions in uncertain time depends on whether or not you can tell the difference between what matters and what doesn't. That's the skill that separates people who stay calm and build wealth from people who get caught in the fear cycle. So no, you don't need to predict what happens next. You just need to focus on what you can control. And here are 5 ways to do exactly that. So first, build your emergency buffer. So an emergency buffer isn't a savings account that you dip into when you want something. It's literally supposed to be cash on hand that you have if your life turns to custard and there is a genuine emergency. So think of those signs that you see in buildings, break glass in the event of emergency. So my big tip on this is set up your emergency savings in a completely separate bank and then automate money into that account. If you don't already have one, make this your top priority because it's not about investing, it's about creating breathing space, something that helps you sleep at night. Even a few $100s to get you started can make a difference. But the point here is to have something set aside that lets you think clearly when things get uncomfortable. Number 2, live below your means and if possible, go a little further. Now is the time to revisit your spending. Even a 5 to 10% reduction can build your resilience. It creates breathing room, it reduces stress, and it may even free up cash that you can eventually put to work. So number 3, think about how you can keep investing, but expand your perspective. So if you're already investing in things like index funds or ETFs, then keep going. Regular investing over time beats trying to time the bottom. But also take this chance to look wider. So some economies are reorganizing, some sectors are resettling, and that means there may be new opportunities emerging geographically, especially in regions like Europe, Asia, and South America. Number 4, stop feeding the panic. So headlines are written to trigger emotion. And the more they sound like a disaster, the more likely you are to click. But fear isn't a strategy, so turn it off if you need to. So let's remind ourselves of a couple of things. As at when I've recorded this video, the US S&P, which is an index that tracks the top 500 US stocks, is down 12.7%. But it's still up on where it was 12 months ago. So could you argue that you just lost 1 year's worth of returns? That doesn't mean there won't be more pain in the future. But it's really good to take the 60,000 foot view and remember not to panic. Instead of panicking, start to listen to those who are experienced investors and other world-class thinkers. People like Howard Marks, Ray Dalio, Warren Buffett. Not so much for their investing strategies, but more on how to think. They don't react, they observe. And they've seen enough cycles to know that panic is never a plan. And finally, number 5, invest in your financial literacy. So when the world feels chaotic, the instinct is to freeze or wait for things to feel safe again. But the truth is that people who move forward aren't always the ones who have all the answers. They're the ones who've taken the time to understand how the game works. So learning how money works, how markets function, how wealth is built, how to evaluate risk, it's one of the most powerful things you can do. Not because it protects you from loss, although it does, but because it gives you the ability to make clear decisions when others are guessing or panicking. So financial literacy doesn't guarantee wealth, but it does give you agency. And when this storm passes, and it will, the people who used this time to educate themselves, to learn principles, to understand the patterns, they are the ones that are going to be in a much stronger position than those who just reacted to headlines. Because knowledge compounds, and the earlier you start, the more powerful it becomes. So if you've ever felt left behind or like wealth was something that other people figure out, now is your chance to close that gap. But not with a hot tip, with clarity. You don't need to be wealthy to think like someone who is. You just need to start seeing the world differently. And that starts with what you choose to focus on right now. Now, if you want more intel on how to level up your thinking, check out my videos on the rules of the rat race you were never told. I really want to change the way people think about wealth because I believe economic stability is not only everyone's right, but can be found through the right knowledge. I'll see you next week on my next video.